It appears that the rich are just getting richer, at least when it comes to the Federal Reserve's recent decision to raise short-term interest rates. The Federal Open Market Committee voted March 16 to increase the primary credit rate by 1/4 percentage point, to 0.5%. And through a series of similar rate hikes this year, the Fed is expected to increase short-term interest rates by 2%. The effort is needed to keep inflation in check. The inflation rate in February was 7.9%, which is the highest rate of inflation since January 1982. Inflation has been rising steadily since April 2021, thanks to supply chain issues and the high demand for consumer goods. Rising interest rates means that the cost of borrowing money is going up. But for companies with a large cash position, the increase in short-term interest rates will likely add to the bottom line at the end of the year. In an analysis, Barron's reports that 3 of the biggest publicly traded companies could be the biggest beneficiaries of rising interest rates. You can expect Berkshire Hathaway, Break.A, Break.B, Apple, AAPL, and Alphabet, Google, to net billions from the Fed's moves. Berkshire Hathaway. Berkshire Hathaway is an interesting company in itself. Run by the Oracle of Omaha Warren Buffett, Berkshire is a conglomerate holding company that is involved in financial services, insurance, freight, and rail transportation and insurance. Subsidiaries include popular companies such as Duracell, Geico, General Re, Helzberg Diamonds, Pampered Chef, and Dairy Queen. Not only that, Berkshire is a major investor in some of the top companies in the world. Berkshire holds more than 907 million shares of AAPL stock, that's more than 44% of Berkshire's entire portfolio. It also holds more than 1 billion shares of Bank of America, BAC, stock, 400 million shares of Coca-Cola, KO, and more than 325 million shares of Kraft Heinz, KHC. What won't you find in Berkshire's portfolio? Cryptocurrencies. Buffett is an old-school buy-and-hold investor who relies on tried-and-true equities. At the end of 2021, Berkshire carried a cash position of $144 billion. The company could see its earnings rise by 8% this year simply from getting higher yields on its cash pile, thanks to rising interest rates. Apple. Apple was already expected to have a big year in 2022, thanks to its new iPhone SE. The phone features a 4.7-inch display and, more importantly, the 5G technology that smartphone owners are craving these days. 5G tech should become hugely important over the next decade. In short, it will allow users to use their smartphones with the same internet speed and reliability of being connected to a modem or Wi-Fi connection. You'll be able to stream videos, participate in video calls, or even have telehealth appointments seamlessly. It opens tons of opportunities for streaming video stocks, sports betting stocks, and medical applications. Apple is expected to generate $20 billion in sales this year from the iPhone SE, as analysts forecast smartphone buyers have been waiting for the SE release. And Apple priced the phone to sell at $429. Previous iPhones have been twice as much or more. Now add to that Apple's huge cash position. Barron's says that Apple had $203 billion on cash at the end of 2021 and could earn more than $4 billion more in cash this year from the increase in short-term interest rates. That should give AAPL stock a 4% increase in its net income for the year. Alphabet. If you're looking for the biggest and most powerful tech companies in the world, then Alphabet would have be on the list to consider. The company, which changed its name from Google to Alphabet in 2015, is best known for its powerful search engine that brings billions in advertising revenue every quarter. In the most recent quarter, Google stock profited from $61.24 billion in advertising revenue, or an increase of $46.2 billion from the previous year. Overall, Alphabet reported revenue of $75.32 billion and net income of $20.64 billion. Both of those figures were up more than 30% from a year ago. And don't forget that Alphabet is planning a 20-to-1 stock split in July. That will make Google stock much more accessible to retail investors. And it will make it more likely that Alphabet will finally get included on the price-weighted Dow Jones Industrial Average. Both of those will be major headwinds for the company. Another tailwind is the Fed raising short-term interest rates. Barron suggests that Alphabet's $139 billion cash position will increase its bottom line by $3 billion and push the company's earnings 4% higher by the end of the year.